Hi, everyone. I'm Dan Held, and thanks for joining this talk today. We're going to be jamming about the Kraken SPDI license that we got. So we've got myself and David. David is the architect behind it all. I work over on the growth team, so I joined Kraken about 1.5 years ago. Currently focused on growth. Growth is kind of a wide spectrum of different things, from looking at the user journey and removing friction from that experience, to looking at new products and services and seeing how we can bring those in and give service our current Kraken customers. So I'm not sure if David's had an introduction yet, so I'll kick it back over to David.
Yeah, thanks, Dan. I'm David Kinitsky, as Dan mentioned, heading up the efforts here at Kraken to build an entirely new type of bank called the Special Purpose Depository Institution, or SPDI, based right here in Wyoming. As you may have seen, a couple weeks ago, we were granted our charter from the State Banking Board in Wyoming. And we're the first one to receive that charter, and it's a big deal. I mean, it's the first crypto company to receive a banking charter in the US. And we're the first one that will be able to seamlessly kind of access the federal payment system and connect them to the digital asset ecosystem. Though we'll have a national presence and even an international presence and serve customers there, we are building the company and the operations in Wyoming. From our perspective, not only was the regulatory and legal framework under this bank attractive, but we're really attracted to the business environment in Wyoming and believe it is the best place to do business as a digital asset company or any type of company, frankly speaking. So Dan and I will get into more about kind of what that means and what you can expect going forward. But suffice to say, definitely check out our announcement on our blog at kraken.com. Sign up and get to the newsletter so that you can stay abreast of updates as we launch early next year.
Yeah, and what's been really interesting about this new SPDI, Kraken banking efforts that we've done in Wyoming is I've gotten hit up from a bunch of different people about if they can open up a Kraken bank account. So, is that in the works, or is this something that's coming soon? What can we tell everyone who's watching? And I mean, I've gotten a lot. Like I've gotten like 10 people hit me up and they go, "Hey, when can I open up a Kraken bank account?" So, will they be able to open a Kraken bank account? And if so, when?
Yes, absolutely. So when we first launch, we're going to be kind of serving the existing Kraken customer set. So of course, sign up for a Kraken account if you don't already have one to get access to it as early as possible. But to start, it's going to be serving the existing kind of Kraken product set, which is, a digital asset account and trading or investment platform. We would be the bank of record there and providing services and account services. Will be a bank account. So when you get access as a US customer, we'll serve you and you will have a bank account. It will just be tightly integrated behind the scenes on the Kraken exchange. Now, the next iteration though, we will be planning to offer something that looks a little bit more like a traditional mobile and online experience. So that you can kind of use Kraken or digital asset company that you want to use for your normal kind of US dollar needs. So that is coming. As we said, we'll probably launch in that first phase at the early part of next year, and then later in the year, get to that second part.
Yeah, it's been super thrilling to see all the interest, all the folks really excited about what we're up to. It's something where we feel that this should be an open dialogue. By the way, so this the panel not the panel, but the keynote we're having here. We wanted it to be kind of an open session where everyone could see and hear our thoughts behind what we're doing over in Wyoming, but also open it up to questions. So if you've got questions, feel free to pop in on the Zoom. I believe there's an ability to comment in there. So if you have any comments, questions, pop into the Zoom, pop into the VR area, and feel free to ask us anything you'd like. We're happy to answer questions around the Wyoming operations and what we have going on there, or anything else Kraken related or crypto related. I'm not sure if you, if it depends on your experience in the space. Some people are on crypto Twitter, some aren't. If you know me from crypto Twitter, I like to talk about Bitcoin a lot. So if you've got any Bitcoin related questions, always happy to answer those as well.
So David too.
Okay, and so, David, an interesting thing that I didn't know about you until we started to work together was your crazy depth in the space. Like you have worked at some of, and you've been like quintessential to like the success of the Bitcoin and crypto industry. So would you mind giving everyone a little bit more color? Just I think which will help everyone, I think, better understand how big of a deal it is for you to work on something like this.
Yeah, no, I appreciate that. It's exciting stuff. I've kind of definitely dedicated my recent career to it, but I've operated kind of in the shadows, so to speak, kind of building stuff. So yeah, lawyer by training, but got into the financial services and fintech space at a company called Second Market, which actually is the predecessor company to what is now Digital Currency Group, or DCG, which is one of the biggest investors and operators in the space. And there, I helped set up some operations, including the Grayscale Investments business and the Bitcoin Investment Trust, and I ran that business, which is kind of, if you're not familiar with it, basically the equivalent of a makeshift Bitcoin or digital asset ETF that kind of operates in the private markets and then gets listed on the OTCQX so that you can buy it through your brokerage account. That asset manager now has some 6 billion plus in assets under management. So it's been a big success and is one of the key ways that a more mainstream audience can access exposure and investment into the space. From there, I joined Fidelity Investments as the first member of their digital asset team to help them develop a strategy in the space that ultimately culminated to them launching Fidelity Digital Assets. And while I was there, I was also the co-portfolio manager of a proprietary crypto fund in-house. Then for the 2 years prior to joining Kraken, I was at a Circle, which is another one of the largest and oldest crypto companies in the space. And I ran corp dev there to help them restructure their business and pivot it to what they are now, which is around that US dollar coin, stable coin, and all their APIs and associated payment products. But then 5-6 months ago, joined Kraken, and Kraken's been one of the my model companies in the space. One of the ones I most admired that was able to thread the needle of being kind of mission driven and true to what the community in the crypto space is about, while still understanding that as a financial services company, you have to play by the rules. And that is a tough path to walk. And I've known Jesse and others here. So when this opportunity came up, jumped at it, especially with the ability to kind of build this new bank, which is massive for Kraken, but also massive for the ecosystem. I think this kicks off an entirely new track of kind of integrating into the banking system. And banking is the biggest deal, the granddaddy of them all in terms of financial services at the bottom of the stack. You can't do anything without banking. And so I think it's like a key milestone here in the industry.
I've told a lot of people that, part of the reason why we're doing this is to unlock new features and services that we can offer our customers, but also be defensive to where we can eliminate the potential bottlenecks that could hamper our progress in going about our business. And could you dig in a little bit more on that side, which is, how much stronger does this make Kraken in terms of our ability to go execute? What does this mean on a practical level of our, ability to, get around, not get around, but make sure we're in front of certain regulations?
Yeah. I mean, when I think about why Kraken's pursuing this, I generally think about 3 objectives, 3 buckets of them. The third one is, new products and services, new customer sets. That's like on the offensive side. The first 2 are a mix of offensive and defensive. The first one is regulatory that you just mentioned. Basically in the US, it's challenging environment. You could either pursue money transmission licenses in all 50 states and really just get coverage, but not the ability to do much else, right? You could try to pursue a broker-dealer license, some other licensure that is kind of adjacent to your business and not really speaks to your core. Furthermore, all the regulation that exists, people are just trying to slot these new businesses into existing frameworks. And it's rough around the edges doing that. This is a more kind of built from the ground up with digital assets in mind, understanding how a regulator is going to supervise them, oversee, examine them, and consolidate it with the commercial code, consolidate it in terms of passportability across the country by and large. So it's a pretty attractive framework, and one that we liked because we don't want to pursue regulation for regulation's sake. We want to pursue right-sized regulation that does what it's meant to do, protect customer interests and the safety and soundness of the institution, which is why this is so key. The second bucket there on the defensive side is with just straight up banking. The digital asset industry has had a tough time getting banking relationships and keeping banking relationships. Kraken's fortunate to kind of be at that top level of having a great group of third-party banking partners. But that said, it's still always a risk in terms of what's going to come down on them and how that may affect you. But more importantly, just having the flexibility to get direct access to the banking infrastructure and be able to integrate that seamlessly into your products and customers experience. It's very different than kind of going to a third-party bank and having to rely on, I don't want to call bank technology staff suboptimal, but it is.
Yeah, Dave. So David, if I'm playing this back in a way that's like really easy to understand for someone who's not super technical, so this means like in the future, I don't have to log into another website and then log back into Kraken. Like it'll all be a Kraken seamless experience. I won't have to, maybe I could, I wouldn't have to rely on all these other services, right? I could just go to Kraken for a whole suite of crypto related services.
Yeah, that's right. I mean, think about it in the more traditional world, if to use an analogy, you get your payroll check if you have a job directly deposited into your Bank of America account. You're able to use that for payments. You're able to get savings. You're able to then access on the Merrill Lynch side of the Bank of America platform investments, and it's all in a consolidated format. So that's what has not existed in the crypto industry by and large, and certainly not from a digital asset centric company. You see these kind of fintechs and neobanks kind of bolting on crypto as like a customer acquisition strategy, but it's not like a native experience. It's not like trying to drive and give customers all of the benefits of these fundamentally new types of assets. I think that's going to be a fundamentally different experience in Kraken.
And David, what are you most excited about from a personal, like you hold Bitcoin, you hold crypto. What are you most excited about in terms of a feature that we'd be able to offer, like having a Kraken bank account, lending, borrowing? Because I know that those are also things that we can do or consider with this. What are you personally most excited about, like from a consumer who owns Bitcoin perspective?
Yeah. So I think a few of them, what I would say is just being able to have my like actual payroll payments, live my day-to-day life and my economic life tied to digital assets. And I can choose whether I want to just keep all Bitcoin and then make payments in US dollars because we have that exchange functionality. Being able to actually use them in terms of an asset and a monetary value is exciting. I mean, that seamlessly has not been the case so far. It's really hard to do that. You kind of have to keep it over your Bitcoin over here, keep this over here, manage the connectivity to the two, manage the exchange. It's a challenge. So that's pretty basic, but it doesn't exist. And then there's like stuff you can add on to that, right? So you can think about, well, I have a lot of Bitcoin. I don't want to sell them, right? Number go up, but I need to pay bills in US dollars. So can I get like a collateralized, loan or something like that? We're looking at that. And then things like investments, long-term in different types of accounts, IRAs, retirement, tax advantaged, things like that. Bitcoin still has not, I mean, look, it's been around and like it's growing and it's in a very different place than it was when we started. Like it's very much more accepted as a legitimate thing, but it hasn't matriculated all the way through the financial system yet. You can't do most of what you can do with dollars yet.
Yeah, totally. It opens up a whole new world when you can have a bank account with Kraken. You're able to have direct access, and you're not having to switch between different financial services.
Is there something that you're excited about beyond that for just personally?
Yeah, that's a good question. So, I'm personally very fascinated in the lending and borrowing space. So the ability to borrow against your Bitcoin. So you use Bitcoin as collateral. Typically, I think every single time it's over collateralized. And you borrow dollars against that balance. Bitcoin as a collateral is fundamentally incredible. Like this isn't your home as collateral. Bitcoin as collateral is fungible, instantly transferable. It's granular. Like you can have a whole Bitcoin, or you could have 1/10,000,000th of a Bitcoin, or 1/100,000,000th of a Bitcoin, and you could have partial. Like if you get margin called, they can do a partial liquidation. So in terms of an asset to use as collateral, Bitcoin is like the most superior asset for collateralized loans. With a home, like homes aren't, they're not fungible. One home is very different than another. It's a very illiquid market, and you can't instantly sell it if you wanted to. And there's also very high maintenance costs. So if the bank wanted to, say you had a mortgage and you defaulted on your mortgage, whenever they go to sell your home, I mean, they have all these other issues. So I think for the US dollar or other stablecoin lender against that Bitcoin collateral, I think it's a phenomenal sort of bet. And so,
and even on the USD side, I think an important clarification here is the bank that we're building, the Special Purpose Depository Institution, or an SPDI, is fully reserved on the US dollar side. Traditionally, when you use a bank account and you deposit your money in there, that bank takes all of its custody and deposits and loans it out, creates a portfolio on the back end that obviously, like you have no say in, no knowledge of the risk profile. Now, there are regulations and restrictions they have to abide by, but they don't, if they take in $1 million of deposits, they don't keep $1 million. They loan it out, and there is insolvency risk. And then we have to kind of create this Rube Goldberg machine of FDIC and all this other stuff to try to figure out how we're going to like guard against that. That's not the case here. We don't loan out your money on the back end. I mean, it's, not your Kraken, not your cash is kind of what I'm saying. And we are going, and that's exciting to me. So like, I think US dollars and Bitcoin are my main focus. There's a broader crypto ecosystem that's exciting too, but I think they're the two greatest assets that man has ever created. And so I'm excited for the innovation that we can provide on both sides.
Totally. I personally have taken out a fiat loan against my Bitcoin as collateral. So not only do I find it interesting, but I've done it in practice. And so I understand the implications of it. I mean, it's essentially a margin loan. So it's a margin loan. And when the price gets a little bit crazy, that could be a risky endeavor, but it's really awesome because back when we were early in crypto back in 2013, 2014, I mean, there were none of these financial services. You hodled Bitcoin or sold it. And now you've got the ability to borrow against it. You've also got the ability to lend it. So I'm not sure, David, what we're thinking since we have a full reserve bank, but on the lending side, for example, in the future, I know that Bitfinex does this where they allow their customers to lend to their margin traders. So it's an internal mechanism where the funds aren't sent outside of their ecosystem. And I think that's a really fascinating way to earn a return on your Bitcoin. And you take on risk. That's why you earn the yield. So what are we thinking about there? Are we, what are we exploring on that side? I know we're full reserve bank, which is incredible. I think this is kind of like the holy grail for the libertarian types, which I call myself a libertarian and many others who are early in the space. So what are we looking at the lending side? For example, like could I lend my coin to Kraken's margin pool, or what are we looking at there?
Yeah. I mean, I don't call myself a libertarian. I just call myself a pragmatist. And like from a pragmatic perspective, like I want to know where my money is going and the risks wherever my assets are held. And that's what this is doing. So, and how that ties into your question is, as I mentioned, you mentioned we're fully reserved, right? And on the US dollar side, we're not conducting that fractional reserve or rehypothecation activity that a bank does. Now, there's certain types of, on the digital asset side and other areas that we can facilitate lending, but it's going to be one, like customer directed, and what you're getting into, the risk profile. It's your kind of call, and you can.
Would that be like peer-to-peer, where customers can, like a customer can individually lend to the pool, but it's not selected by default? So it's something that they would have to opt into?
Well, at a minimum, they need to know everything about what they're getting into. They need to know all the parameters, I think you could pursue both paths, but like for sure, we can't throw your money into some pool or do something behind the scenes. You need to be aware of what you're doing. And furthermore, we can integrate with other partners who can conduct any lending activities that we can't potentially to facilitate it that way and use our bank account as collateral or otherwise. So we'll definitely be able to play in that space, but it's worth again, just stressing that there are restrictions that we're abiding by in how we play that. And everything we do needs to be, not behind the scenes, not rehypothecated, shown to the customer, and not fractional reserve lending. And like the whole point of this, again, goes back to this regulation was built from the ground up to achieve what the regulation set out to do that I think a lot of regulations have kind of gotten away from, which is protect the customer and the safety and soundness of the institution. And that's what it's built around.
So how do we get so far away from this original idea that I think seems very rational, right? I want to know where my funds are. I want to know who they've been lent out to. How do we get so far away from that? What sort of led to this?
Yeah, it's an interesting question. And certainly I'm probably not the best person, but I can certainly give my perspective on it. Look, regulation is a static thing, right? You build a regulation, you build this whole infrastructure and bureaucracy around it, and it's real. And a lot of them are not only well-intentioned, but at first reasonably well structured. There's a real risk that occurs. Now, some of them do come out of crises and maybe there are reactions, but by and large, they're built because something real happens. And like there's a long history of, you know, bank failures and other sorts of activities that our financial services regulations are rightfully trying to protect against. But then the market changes, innovation happens, and all this other new business models occur and new type of companies come out. And like the regulators and the governments, like they can't come out. It's not as flexible, come out and like do that. It's not as flexible. And then they also have an innovator's dilemma. Like, why isn't New York, you know, going to be the center of this new thing? Well, they have these legacy interests that, you know, they have no incentive to. It's just like a big incumbent corporation, and that's real. And again, it's not, in my view, malicious or someone trying to like stop anything. It's just like the way it is. And, you know, it's challenging. So it was really refreshing to see Wyoming step in here and understand that and say, look, there's different activities here. There's different risks. We need to create a regime that actually addresses those risks and doesn't subject it to the restrictions that were built to solve for risks that don't exist. And so like, that's what this is. And that's why it's so exciting.
That's awesome. Yeah, I think for me, being like a gold bug and a libertarian, like seeing how the banking infrastructure has developed over time and seeing these regulations fail to do what they intended to do. Yeah, I do agree with you that like most regulations are created with a good intent, and they're usually after a certain event that occurs, a certain event where there was risk introduced to the system that hadn't been thought about before or showed that there was a structural flaw. So I totally understand the need for some regulations. You know, I'm not, obviously as a libertarian, I like the most minimal amount possible, or self-regulatory entities. I believe like FINRA is a sort of like a company collective where it's self-regulatory. But, you know, it is interesting to see how like even things with good intentions over time may not be flexible enough, or if they're not really, really focused on solving that problem, they could actually just turn out to be a more bureaucratic implementation rather than one that actually goes out and solves this problem of risk. Because that's what it usually sets out to do, is solve the problem of risk or mitigate risk or make sure that consumers are protected. You know, that's always kind of the mission. We do have a question from our audience. So I'm in the VR chat, by the way. If you are on the VR, if you're in there hanging out in VR, feel free to pop in your question in the chat. I'm there ready to bring it over and talk about it here on the live stream. So we've got a question from a guest called Wild Bread. And this individual asks, what does this new charter mean for crypto broadly? In other words, why was this a historical moment for crypto?
Yeah. So as I mentioned earlier, like no digital asset company has been in the U.S. has been granted a banking charter and had access to the federal payment system. And as I said, the way that our financial services system and staff works, banking is at the bottom and controls everything. It is like the key to it. And so if you don't have that access, you're not able to, well, one, you're reliant on third parties who, you know, in a shifting regulatory or political climate can be a risk. You have access to direct infrastructure that you can integrate into your products and services and control the whole customer experience from top to bottom. It's important. And I think that it's fostering a new framework within the crypto community to do business in the United States. I think, you know, and I'll tie this to the conversation we were just having, you know, about regulation coming out, well-intentioned, address risk, things like that. When that happens, though, it's really tough to understand all the implications of it and what other risks it may secondarily create. And I think that we're in a position now in the United States where our regulatory environment is actually hindering us and is potentially a national security risk. If you, like I, believe that this is a future economic system that is going to be massive in the world, if the United States is not able to facilitate the innovative and entrepreneurial landscape that has served it so well in every other technological and social innovation, we're going to fall behind. And the customers you're trying to protect from this one risk are going to be just blown away because they're not at the forefront of the global system. As I said, you know, I'm not one of these folks who's saying, oh, Bitcoin, let's destroy the dollar. Let's destroy. No. Like I said, Bitcoin and the dollar are the two greatest assets that man has ever created. And in fact, I believe that it's in the United States' best interests to pursue a strategy that allows us to create an innovative ecosystem for Bitcoin. That has not existed. And Asia, has been pulling away, frankly. And so for the crypto community, I think that this allows an easier path to do business in the United States. It also provides an easier path for other digital asset companies to potentially be backed by digital asset native companies like Kraken, who understand how things work. I mean, if you've ever tried to explain how the quote unquote blockchain works to someone in compliance or legal who's not familiar with it, it's challenging. And there's a whole kind of onion there to peel back. So I think there's a whole wide range of innovations here. The key point that I'll end on that I think is probably even bigger, it's not just for the digital asset or crypto industry. I think it's the financial services and fintech and neobank ecosystem at large. When I think about who our competitors are at Kraken, at this SPDI, it's not just the other digital asset companies. It's all the fintechs, neobanks, and financial services companies. And then furthermore, there's competition and convergence there. And on the regulatory side, state versus federal. And there's a lot of crosswinds politically and regulatorily there. This is at the heart of all of that, and I think is driving the things in the right direction. So I would frame it much bigger than just crypto.
That gives us great color, David. Really appreciate you diving in fully to give us the whole perspective. And when you say neobanks, what do you mean exactly with those? Because I know it might be kind of more insider ball terminology. Could you explain that?
Yeah, I'm talking about a startup that raises a bunch. Let me give the negative spin. I'm talking about a startup that raises a bunch of venture capital, basically builds off of an existing bank and puts a slick interface on it and markets to millennials. What I'm really talking about is basically just someone who's a digital first bank. Gotcha.
And would maybe you describe Robinhood as that, where Robinhood isn't an exchange, it's a brokerage, and it's a brokerage that started with started with 0% fees as a user acquisition method, but really they do make fees in another way, just more obfuscated and marketed towards millennials.
Yeah, it's interesting. Robinhood's an interesting example because it's it kind of went the opposite way, and it speaks to that convergence I was talking about. It didn't start as a bank, right? It started on the broker-dealer kind of investing side, and now is moving over to the bank side. And that's what I meant about the convergence of all of these features into a single platform. So you have more traditional neobanks like Venmo and Square and these P2P payments apps coming at it from that angle. And then you have Robinhood and others coming at it from the other angle.
Gotcha. Yeah, it's interesting too, because I've seen this happen in the crypto space, to make it more relatable for those folks who are just in crypto. You've got Kraken, which started with buying and selling crypto assets. And then you've got companies like BlockFi, Unchained Capital, and they're starting with lending and borrowing, but they're starting to move into the brokerage side. And maybe someday they start to build out an order book, right? And similarly, we've got the order book. We're building out more slick interfaces for more retail customers to interact with our product. But then, we're probably going to layer in with our ability with the Wyoming SPDI. Now we can do lending and borrowing services. So it's kind of like that full stack, banking stack of what is everything I need to do when I go to the bank, and intertwining crypto intimately into that. I think it's super fascinating.
Yeah, and it's also the distribution channels and customer segments that you're speaking to. It enables us to kind of have dual channel approaches. You can have folks who are crypto native or folks who have been in the space. You can have folks who are brand new. And, Kraken's mission has always been to promote the adoption of digital assets, mainly to enable more financial freedom for individuals. And this is a key tool in that, because we can speak to different audiences than we might otherwise be able to, when the first experience or thing that you can do is buy and sell Bitcoin or trade it, right? It's very different to say, deposit, create a mobile banking account or online banking account. Oh, and then if you want, enter into the asset ecosystem over here. So it'll be part of the Kraken brand, and we're tentatively calling it. And this is a question for you. We're tentatively calling it Kraken Financial, but we're also considering Kraken Bank. Which do you prefer?
I think, for crypto folks, the bank sounds really exciting, right? We've all been looking for the bank account that's not going to get shut down whenever the internal risks, the internal risks team at Citibank or Bank of America goes, oh, I don't like the word crypto in this transaction. Mm-hmm. And you're like, this was a completely legal transaction. What are you talking about? So I'm sure a lot of folks that are crypto OGs would probably like the, crypto bank, because that kind of, it's also a little bit of a testament to the resiliency of the space and the resiliency of Bitcoin and how far Kraken has come. Kraken's been around since 2011. We're one of the oldest exchanges out there, still in operation, never been hacked. One of the most secure places to trade and transact with your Bitcoin. So we are, we've been around for a long time. So I personally feel the word bank is kind of cool, because it's like, we came out to change the whole banking system, and now, we've made it this far, which is really, really cool. Kraken Financial, I think, is nice too, though, because it also has like a little bit more of a, I would say like more of a millennial polish. It feels smoother. Financial seems more modern. Bank seems kind of old. So it's it's really tricky. I would go with bank personally, just because I think it's kind of fun, and it's more of a tongue-in-cheek thing where we've made it so far to be like, hey, we are the bank now. It's like the meme. Yeah, I am the captain now. I am the bank now.
Yeah, totally. Financial is like musical. It's like symphonic, right? It's slick, it's sleek, it's smooth.
Right.
Bank is like harsh, staccato, sounds like German. It's basically like, it's like the Iron Bank in Game of Thrones or something. Both have their merits, for sure. It'll be interesting to see. And banking, like always, gets interesting reactions, certainly from like the crypto space. And the other space, and people are always asking, like, is crypto eating banks, or banks eating crypto? Like, which is this, right? I'm kind of like both, neither. It's like an Ouroboros, like a snake eating its own tail, or like a yin and yang. Like there is like ultimately like they're converging, they're same two sides of the same coin. And so kind of which way that goes, like, is open to interpretation. It's kind of a Rorschach test of which way you think it. I view it's kind of both.
Yeah. I mean, we certainly see this with USDT, USDC, which are, essentially stable coins that are wrapped. Mm-hmm. It's code wrapped around real US dollars sitting in like a traditional bank account. So it's an interesting, that's where like, which one is the, which one's eating which? I think that's a perfect example of going, well, which way is that going? Is it digitizing dollars, bringing them into the system, or is it the digitization process, which is the innovation? There are some things to highlight though too, with some of these, like, Bitcoin was created to solve a problem, and that problem was in trust. Having to trust your bank, having to trust your central bank, and Bitcoin solves that problem on a very fundamental level, which is a huge breakthrough. And through part of that, through the problem solving trust, Bitcoin solves settlement. So the settlement between different counterparties, now I can send my Bitcoin, and after a certain number of confirmations, I am very, very confident that those will not be reversed. So we have some interesting things where, like with Tether, it's a big innovation, I think, in terms of like digitizing dollars and just seeing how freely those flow, especially in countries like, I think in China, USDT is probably like a big, big component over there. I could imagine traders there would like to use it because they can't get access to real dollars. But USDT can be frozen. So this is an interesting problem that occurs when we see these two worlds come together, is that it's which one is eating which. It's hard to tell. And then also, what risks are we introducing, or what problems are we solving?
Yeah, and I'll give you like a positive example of the like trustless thing, which is a question like I always get from Bitcoiners and others. Trust is a spectrum, and just like privacy is a spectrum, and just like privacy doesn't mean staying anonymous. In my mind, it means like the ability to choose what you're sharing. Similar here. And one interesting thing that Kraken has been at the forefront of at the industry, and the industry is not there yet, but we're getting there. Even if you have Bitcoin and you deposit it and keep it at a bank as a quote unquote intermediary, right? There's still assurances and trust benefits that you can get in terms of the settlement assurances and in terms of something called proof of reserves. And it's the idea that with Bitcoin held at a third party, that third party can still enable the ability for others in a much more trustless way to audit and assure that their reserves meet what they say they have. And not only that the whole in aggregate, they're fully solvent and funded, but that each person's property or account is what it says it is. And that's a really fascinating thing here because that's something that you can't do with cash. without E&Y or some third party. And that's currently in the state of play of proof of reserves in Bitcoin and others that Kraken is looking at and pursuing. You still do need some version of a third party. But as we move forward, that's going to be less and less, and it's going to be much more solvable and provable, basically. These assurances are what it's all about in my mind. This space is all about digital property rights, and that includes to have good property rights, you need to have good assurances around kind of verifiability and things like that. So I think
don't trust, verify.
Yeah, totally.
It's a core meme of the space, and yeah, totally. I think most people here probably don't know this, but Kraken is the only exchange ever to do a proof of reserves, which I think is really cool. And I think, David, what you're working on there, definitely points towards a future where Kraken explores, this very transparent way to talk about the risk that you're taking on when you transact with Kraken, which I think is in stark difference to a lot of our competitors. I'm not going to point into any individual company out, but for us to go be this forward with transparency, I think is huge. It's all about trust. It's all about us trusting us as a counterparty. And I think that's what we're striving to do is build trust with our customers. Yeah. We've got one more question here, David, just popped into the chat from Keith Estention. The question is, how will Kraken's bank differ from Avanti in terms of market and products?
Yeah. I mean, so Caitlin and the Avanti team are tremendous and have been key partners in Kraken. And we worked together quite a bit on bringing this to kind of come to the forefront with Wyoming, the SPDI, and which we're not Avanti on as well. And definitely we have a bit of a focus difference. Obviously they're starting up as a company themselves, and Kraken exists and has these business lines. They're focusing on a much more kind of B2B institutional corporate style offering. There's no doubt there'll be competition between us, but fundamentally it's a very different offering. They're not going to have all the other attendant financial services of trading and investments and all of this other stuff, certainly, and not focused on retail and individuals at all. And so it's pretty different. Second of all, I'm not too worried about it. Like I said, we got to build the pie before we can cut it up and share slices. And as I said, I view the competition not as between different SPDI banks or different digital asset companies. It's much bigger than that. Think bigger than that. Come on. I mean, I'm not going to fight over scraps, but out by the dumpster. I'm trying to go into the restaurant. I'm trying to own the restaurant. Let's take on fintech, neobanks, financial services, and so on. And I think we're both going to make inroads there together.
Totally. Yeah, I'm a huge fan of Caitlin as well. She's done awesome work. She's been a huge advocate and proponent of getting this Wyoming banking license structure in place. She also has great thoughts on rehypothecation and how the existing financial system has all this structural risk. And then a lot of people don't know the risk that they're taking. So I think she's got great thoughts on that. I would recommend following her on Twitter if you don't already. Yeah. She's got great thoughts. She's very succinct, very to the point. She might scare you a little bit. It might be hard to sleep at night. You might want to pull all your money out of your bank account and put it into, into Kraken Bank or Avanti after you're hearing this, and you probably want to go full reserve. So it'll if you haven't heard of her yet, take a look, dig into it, understand. It'll help you understand a little bit more of the risks that you're taking with your money, which I think at the end of the day, David, you highlighted earlier, that's what you care about, is transparency, understanding risk. That's a rational perspective to have as someone who's managing their money. So we're coming up here at the end of our talk. I don't see any last questions. So David, is there any last parting quip you want to give everyone about what you're working on?
No, I mean, stay tuned for more. You can go, as I said, to kraken.com to read our announcement blog, and then sign up for an account or the newsletter just to get the earliest updates and access to this stuff. And there's going to be a lot more to come, so it's going to be very exciting.
And where can we find the newsletter?
Well, if you just go to kraken.com in the blog, you may know the exact address better than I do, in fact.
Okay, cool. Just want to make sure we point people in the right direction. Yep. Yeah, so we're super excited for this to launch. David, you've done awesome work here. Glad we could jam a little bit, you and I, just kind of talking through for everyone to hear how we're approaching this. But yeah, super thrilled with what we're doing here, David, and proud to work with you.
Yeah, thanks, Dan. Awesome.